Good day. I welcome you once again to AE Accounting Tutorials. If you haven't subscribed to my channel, kindly subscribe to the channel. Okay, we are continuing our series of final accounts of a sole trader. In part 1 and 2 of this video, we look at the format of an income statement, and we also look at the format of the statement of financial position. But in this chapter, we are going to take a full practical question and see how we can solve it. Is that okay? So without wasting much time, let's go straight to the question. The following information has been extracted from the book of Ericus Ventures, a sole trader for the year ended 31st December 2020. Trial balance. Capital at 1st January, 100,000 cedis. Stock 1st January, 60,000 cedis. Building, 120,000 cedis. Drawings, 10,000 cedis. Fixtures and fittings, 10,000 cedis. Motor vehicle, 30,000 cedis. Debtors, 15,000 cedis. Creditors, 40,000 cedis. Advertising, 1,000 cedis. Insurance, 1,000 cedis. Salaries, 45,000 cedis. Provision for doubtful debts, 500 cedis. Rate, 1,000 cedis. Discount received, 1,000 cedis. Discount allowed, 2,000 cedis. Return inwards, 250 cedis. Return outwards, 200 cedis. Purchases, 80,000. Sales, 150,050. Electricity, 2,000. Bank, 8,500. General expenses, 2,000 cedis. Bank loan, 96,000 cedis. The total of the trial balance is 387,750. Additional information. A. On 1st December 2020, Ericus Ventures reviewed his debtors and decided that 1,000 cedis should be written off as bad debt. B. Provision for doubtful debt is 5%. C. Electricity bill outstanding, 500 cedis. D. A commission received of an amount of 2,000 cedis has not been received at the end of the accounting year. E. Out of the insurance paid, 200 cedis covered parts of the period in the subsequent year. F. The proprietor of Ericus Ventures withdraw an amount of 4,000 cedis for payment of his son's university school fees, but no initial entry was made in the bank account. J. Stock at 31st December is 70,000 cedis. H. 1/4 of electricity relates to the trading aspect of the income statement. I. Depreciation on fixtures and fittings is 5%. And motor vehicle is 10% using a straight line method. Okay, to start solving a full income statement or a final account statement for a final account question for a sole trader, it is always advisable to start everything from the additional information. Try to analyze the additional information and see where each transactions will be actually treated. Okay, so let's go through the additional information again. Try to analyze the information over there and see how we are going to treat them. Is that okay? So the additional information 1 is saying that on 1st December, Ericus Ventures reviewed his debtors and decided that 1,000 cedis should be written off as bad. Okay, so in our previous video, we talked about how we treat bad debt when it is being found in the additional information. This means that, note, items that are found in the additional information, they have not yet gone through the dual aspect of bookkeeping, so they are always treated twice. Is that okay? So they are saying that Ericus Ventures reviewed his debtors and decided that 1,000 should be written off as bad debt. The treatment is that we are going to less the 1,000 which should be written off as bad from debtors figure, okay, in order to get the actual trade debtors amount. And from the trial balance, the debtors amount is 15,000, okay, So in order to get the actual debtors balance, what we do is that we are going to less the bad debt written off, okay, to get the actual debtors figure. That will be 14,000 cedis. But then when we start presenting our income statement and statement of financial position, we are going to be doing the calculation along the line. Is that okay? When we are presenting it. So I'm just trying to analyze how we will treat them. And B, they are saying that provision for doubtful debt is 5%. Okay, we should calculate 5% on debtors figure. But mind you, before we calculate the 5% on debtors amount, we need to take the bad debt written off, bad debt to be written off, which is 1,000. So when we take it from the total debtors figure of 15,000, we had 14,000. So it is on the 14,000 that we are going to calculate the provision for doubtful debt, which is 5%. So 5% on 14,000 will give us 700 cedis. Is that okay? So this 700 cedis, you can see that there is a provision for doubtful debt in the trial balance, which is 500 cedis. And we calculated new provision and we had 700 cedis. This is the type 3 form of provisions. We've learned this in our previous videos. So anytime there is a provision in the trial balance and at the same time a provision in the additional information, what we do is that we compare the two. Is that okay? The provision in the trial balance is 500, but the current provision we've calculated is 700 cedis. So when we compare the two, we can see that there is an increase in provision from 500 cedis to 700, and the difference is 200 cedis. So these 200 cedis, because it is an increase in provision, we are going to treat it as an expense in the profit and loss aspect of the income statement. And these 700 cedis will also be less from debtors figure under a current asset when we are preparing our statement of financial position. Okay. And D, a commission received of an amount of 2,000 had not yet been received at the end of the accounting year. Let me take it again. A commission received of an amount of 2,000 cedis has not been received at the end of the accounting year. This means that the commission is an income to the sole trader, but at the end of the accounting period, Ericus Ventures has not received the commission. This means it is an income due or an income owings or income in arrears. So the treatment is that we are going to add it to our gross profit under other incomes. Okay. After that, then we add it to our current asset. That is the treatment. And they are saying that that is E. Out of the insurance paid, 200 cedis covered part of the period in the subsequent year. It means that the total insurance that is being paid in the trial balance, which is an amount of 1,000 cedis, 200 cedis is for subsequent year, which is next year. And from the accrual concept, we should match all revenue incurred for a particular year against the expenses incurred for a particular year. Is that okay? So we can't match next year's revenue against this year's expense. So the treatment is that we are going to take the prepaid insurance of 200 cedis from the 1,000 cedis of an insurance that have been paid in the trial balance. Okay, so we take it from it and we had 800 cedis. We treat it as an expense. Okay, and the prepayment of insurance, which is 200 cedis, we will still add it to our current assets. And F, the proprietor of Ericus Ventures withdraw an amount of 4,000 cedis for payment of his son university school fees, but no initial entry was made in the bank account. This means that the proprietor has made drawings of 4,000 cedis from his bank account, but at the close of the period or at the initial stage, no entry is being made. So what is going to happen is that when we reach the current asset column where there is bank, we need to take the bank drawings from it, which is 4,000 cedis, before we present the actual bank balance. Okay, and this 4,000 cedis, because it is drawings, we will still add it to the drawings that is in the trial balance. Okay, the drawings in the trial balance is 10,000 cedis, and the bank drawing too is 4,000 cedis. We add the two, making 14,000 before we subtract it from capital and are financed by in the statement of financial position. And J, stock at 31st December 2020, that is 7,000. Okay, this is the closing stock at the end of the period. So what we do is that you include it in the current asset. Is that okay? So that is the closing stock. And H, they are saying that 1/4 of electricity relates to the trading aspect of the income statement. 1/4 of electricity relates to an income statement. Mind you, those expenses that is being matched against the net sales in the trading aspect of the income statement, they are the direct expenses to the net sales. Is that okay? But then the indirect aspect, we match it or we record them under the profit and loss aspect. But they are telling us that we know that electricity is an indirect expense. So in a normal circumstance, it's supposed to be in the profit or loss aspect of the income statement. But then they are telling us that 1/4 of it relates to trading. So the electricity amount in the trial balance is, the electricity is 2,000 cedis. So if 1/4 of the electricity relates to trading, then it means that 1/4, which is 1/4 of the 2,000 cedis, okay, that will give us 500 cedis. So this 500 will be treated under the trading aspect of the income statement. We are going to add it to the cost of sales before we less it from net sales. Is that okay? And then the remaining, this is 2,000. So after the 2,000, there will be we less our 500 that we've treated in the trading account. So left with 1,500. And this amount will be treated as an expense in the income statement, or we treat it under the profit or loss aspect of the income statement. Okay. And they are saying that depreciation on fixtures and fittings is 5% and motor vehicle is 10% using a straight line method. Okay, they have given us the percentage at which we should calculate our depreciation, but they are saying that we should calculate the depreciation on a straight line method. The straight line method means we are calculating the depreciation on cost. Okay, so we calculate the depreciation on cost. This is a current depreciation. So after we've calculated the percentage on the cost of the assets, what we do is that we treat the depreciation as an expense. Okay, after that, when we get to the statement of financial position, we still record it under accumulated depreciation and take it from our cost of the asset to arrive at the carrying amount or the net book value. Okay, so let's start our presentation from the income statement, but then we'll be doing the calculation along the line. So first of all, you need to write the name of the sole trader or the name of the business. So we have Ericus Ventures. The name is very important. You have to actually write it. Okay, so we are beginning with the income statement. That is 31st December 2020. Okay, bring our currency sign. Our currency sign from the format we've learned in the previous videos. We will be starting from sales. The format says we should start from the sales amount. Is that okay? So the sales from the trial balance is 150,050. So you have our sales of 150,050. Okay. Then we less our sales returns. When I say sales returns, I'm talking about the return inwards. Okay. The return was 250 cedis in the trial balance. Okay, so we are less. That will give us 149,800. So after we've gotten, so this amount is the net sales. The net sales. After we've gotten our net sales, what we do is that we less our cost of sales. Our cost of sales. Okay, so with the cost of sales from the format, we'll be starting from opening stock, and there is an opening stock or opening inventory in the trial balance. So opening stock. And the opening stock in the question is 60,000 cedis. We bring it under the second currency. 60,000 cedis. And we add our purchases. There is purchases amount in the trial balance. The purchases amount is 80,000. But then, if there is no adjustment on purchases, we should just record it straight under the second CD sign, add it to the opening stock to get our net purchases. But if there is adjustment on purchases, then we need to bring it to the first currency sign. So it's 80,000. But there is adjustment on the purchases, which is returned outwards. Okay, so purchases return or return outwards. Purchases returns. The purchases return in the trial balance is 200 cedis. We are less. So after we've taken it, we'll be arriving at 79,800. Okay. But first of all, let me bring it here and give it a name. And this will give us the net purchases. The net purchases. Okay. When we add our net purchases to the opening stock, we'll be arriving at an amount of 139,800. And this will be the cost of goods available for sales. Cost of goods available for sale. Someone may say gaps. Is that okay? After we've gotten our cost of goods available for sale, now we take out our closing stock. Okay. So we have the closing inventory. The closing inventory in the question is 70,000. So we'll be taking our closing inventory. After we've taken our closing inventory, we'll be arriving at an amount of 69,800. And this 69,800 is supposed to be the cost of sales, okay? So we're supposed to record it here and take it from our net sales. But mind you, from the footnote, they are saying that 1/4 of electricity relate to trading, and the electricity amount in the trial balance is 2,000 cedis, and 1/4 of electricity, that is 1/4 of electricity, which is 2,000 cedis, will give us an amount of 500 cedis. So they say we should treat it under the trading aspect of the income statement. And electricity is an expense, so we have to include it in the cost of sales. So we add our electricity. Let me even specify it by direct electricity. That is 1/4 of the electricity amount in the trial balance, which is 2,000 cedis, and that will give us an amount of 500 cedis. So when we add the 500, we'll be getting 70,300. 70,300. This 70,300 will now be the cost of sales. The actual cost of sales. This cost of sales we are looking for after adjustment, we've actually arrived at the cost of sales itself. That is 70,300. After we've gotten our cost of sales, we take the cost of sales from the net sales to arrive at a gross profit or loss. Is that okay? So that will give us 79,500. 79,500. Because the net sales is greater than the cost of sales, you see that we arrive at a gross profit. Gross profit of this amount. So let's go through the question and see if there is any other income. Okay, if there is, this is the end of the trading aspect of the income statement. But if there is any other income, we need to add it to the gross profit before we start with the profit and loss aspect of it. Is that okay? But looking at it, we can see that there is some other incomes. Okay, there is a discount received in the question. In the trial balance, we have a discount received of 1,000 cedis, and we also have in the additional information D, we have a commission received of an amount of 2,000 cedis has not been received at the end of the accounting year. That is an income due, an income owing. So an income owing, we suppose, is an income to the business or the sole trader. So you have to add it. So we add discount received and commission received due. Okay, so that is discount received. So you can head it as other income. Other income. In the other income, you have discount received. With the discount received, an amount of 1,000 cedis in the trial balance, and in the footnotes, the D part will have commission received due or outstanding. So let's say commission received due, that is commission received income owings, which is an amount of 2,000. We are going to add it and get our final answer. But before that, because these two amounts we are adding, I can say that we can even bring it here. Let's say we have our 1,000 cedis here. Okay, then we have the two. Let me write it well. We have our 1,000 cedis here, 2,000 cedis here. Okay, after that, the total will give us 3,000 to make the calculation very nice. Then we add the 3,000 to the gross profit. Okay, and that will give us 82,500. Okay, so this will be the total income of Ericus Ventures, the total income. Okay, so we are done with the trading aspect of the income statement. Let's look at the profit and loss aspect, where we will be lessening other indirect expenses, that is the other operating expenses. Okay, so we are continuing first. So let's bring our CD sign here. So we have our total income. Total income is 82,500. 82,500. So we are going to less our operating expenses. Operating expenses. Okay. So let's go through the trial balance and try to identify some expenses in the question. With the expenses, we have advertising of an amount of 1,000 cedis. Is that okay? We have advertising. Advertising of an amount of 1,000 cedis. Okay. And we also have insurance. Okay. And the insurance amount in the trial balance is 1,000 cedis, but there is a prepayment. So let's say insurance. The insurance is 1,000 cedis. Then the prepayment, we less the prepayment. You have insurance prepaid. The insurance prepaid in the additional information is 200. So when we take it out, we have an 800 cedis. Okay. After that, let's still go through other expenses. Is that okay? So 800 cedis. So after that, we have another expense, which is salary. Salaries of an amount of 45,000. Okay. After salary, we can see that when we get to the additional information, we have been given, from the B part of the additional information, they say that provision for doubtful debt is 5% on debtors. Is that okay? And I say that the debtors balance let's say debtors. Let me do this work with debtors. Okay, so balance as per the trial balance. Balance as per trial balance was 15,000. And bad debt, from the additional information, they say that we should write off part of the debt, okay, which is 1,000 cedis. So bad debt written off of an amount of, let me check, of an amount of let me check from the question, of an amount of 1,000 cedis, right? And this will give us 14,000. 14,000. So this will be the balance CD. Okay? And they say we should calculate 5%. The B part says provision for doubtful debt is 5%. So the provision for bad debts, the provision for, let's say, doubtful debt. So we calculate our 5% on the remaining debtors balance. Okay, that will give us 700 cedis. Okay, so this is the current provision. But then there is also an old provision in the, that is last year's provision in the trial balance, which is an amount of, that is another provision, but it is last year's provision or old provision. Old provision for doubtful debt. But this one is the current provision. Is that okay? So the old provision is 500. So we can see that this is the old provision and this is the new provision. You can see that there is an increase in provision, and the increment is what matters over here. The increment is 200 cedis. Okay, so this difference is an increase. It's an increase in provision. Is that okay? So this increase, we consider it as an expense. Okay, so an increase in provision will be considered as an expense, and this amount to the current provision, which is 700 cedis, will be taken from debtors figure in the statement of financial position. So our main aim here is to find the difference between the two. But in a scenario where the current provision is less than the old provision, the difference will be treated as an income. Okay, but in this scenario, the old provision is the current provision or the new provision is greater than that of the old one. So the difference, which is 200, will be treated as an expense. So we say that increase in provision for doubtful debts. Okay, let's see, DD for doubtful debt is 200 cedis. Okay. Mind you, we'll be using this amount. We will not calculate it again. We'll be using this 700 in the statement of financial position. Is that okay? We'll be taking this from the debtors figure to arrive at. So this is the amount we'll be presenting in the statement of financial position. After we've taken our 1,000 from the debtors figure, the balance CD of debtors figure is 14,000, and there is a current provision on it of 700. So we will take it out. We will be having 13,300. So this amount will be sent as debtors. We will send this amount as debtors balance to the statement of financial position. Is that okay? So when we get there and I'm using this amount as debtors figure, don't get confused. Is that okay? Okay, after we'll be able to find our increase in provision of 200 cedis, let's consider another expenses, which is rates. Okay, there was rate of an amount of 1,000 cedis in the trial balance. An amount of 1,000 cedis. Okay, of an amount of 1,000 cedis, and we also have discount allowed. Discount allowed. Discount allowed is an expense. Discount received is an income. Okay. Discount allowed. We, the sole trader, we allow discount to our customers. Is that okay? So when we allow discount to our customers, it is going to reduce the customer's balance. Okay. The entry is that we are going to credit the debtor's account, the debit, or discount allowed account. So discount allowed is an expense. And the discount allowed in the question is an amount of 2,000. Okay. After discount allowed, we also have, let's consider the electricity itself. Okay. We also have electricity. This electricity is quite confusing. You have to actually consider it very well. Mind you, there is an electricity in the trial balance of an amount of 2,000 cedis. Is that okay? After the 2,000 cedis electricity in the trial balance, they are telling us that 1/4 of this electricity relates to trading. So we calculate 1/4 of electricity, 2,000, and we had 500. That is what we've used over here. Electricity, we used it over here. So we need to take out this to get, that is 1,500 as electricity balance CD. That is balance CD. Talking about electricity. Okay, you get an electricity balance CD. So this is what we're supposed to present in the income statement. But then additional information is also telling us that is additional information number C, that is C. Is saying that electricity bill outstanding, there was also an owings of 500 cedis. Okay, so that is electricity due or owings is 500 cedis. So we add it back to get our 2,000 cedis. So we are going to present these 2,000 cedis as electricity amount in the income statement. Is that okay? So don't get confused. So the electricity is 1,500, and we add electricity outstanding or due or owings of 500 cedis, and that will give us an amount of 2,000. After we've treated the electricity, we also have another general expenses in the trial balance. The general expenses amount is 2,000 cedis. We have also have general expenses. General expenses of an amount of 2,000 cedis. After that, we also have bad debt. This bad debt I'm talking about is the bad debt written off in the additional information. That is the first item in the additional information. The bad debt written off is 1,000 cedis, 1,000 cedis. So it's also an expense. So I think after looking at the bad debt, we can also consider the depreciation. The depreciation. So from the footnote, they are telling us that, let me read that part. They are saying depreciation of fixtures and fittings is 5% and motor vehicle is 10% using a straight line method. With a straight line, we are calculating the depreciation on the cost of the asset, but not the carrying amount or the net book value. We only calculate depreciation on net book value or carrying amount when we are asked to use a reducing balance method. But here is the case, we are using a straight line method, which is on cost. Okay, so let's consider fixtures and fittings. They are telling us that 5%, the cost of the furniture and fittings is 10,000, and 5% of 10,000 will give us 500 cedis. 5% on 10,000. After that, let's consider motor vehicle. Motor vehicle is also 10% on the cost, and the cost of the asset is 30,000. 30,000 cedis. 10% on 30,000 will give us 3,000 cedis. Okay. So I think from the question we are done with the expenses. So what we are going to do is that we are going to add these expenses. Okay. So when we sum it up, we are going to get an amount of 59,500. 58,500. But when you sum this up, you get 58,500, and this will be the total expenses. This will be the total expenses. We are going to take the total expenses from the total income. Okay, so when we do that, we'll be arriving at 24,000. Because the total income is bigger than the total expenses, this amount will be the net profit. The net profit. But in another situation where the total expenses is bigger than the total income, then you'll be arriving at net loss. In this situation, the total expenses is less than the total income, so we had 24,000 as a net profit. Is that okay? So we are done with the income statement aspect of this question. So let's quickly look at the statement of financial position. Is that okay? So let's continue from the statement of financial position. So with the statement of financial position, let me raise it up. Statement of financial position. Assets. That is 31st December 2020. So I'll have my currency sign. But then let me bring the cost of the asset first. Because we have cost, we have accumulated depreciation, we have the net book value. We bring our currency sign, which is CD. See this. Is that okay? But then I told you that in the format of the income statement, I told you basically we have about 3 different models we use in calculating or knowing the financial position of a sole trader. But then in the format, we look at the net current asset model, which is the working capital model. So I'm going to use the working capital model or the net current asset model to actually know the financial position of Ericus Ventures. Is that okay? So we begin with the non-current asset. Non-current asset. With the non-current asset from the question, basically we have about 3 non-current assets in the question. Okay, we have about 3 non-current assets. The first one to talk about is building. Okay, let me list them. We also have fixtures and fittings in the question. Fixtures and fittings. After that, Ericus Ventures also have motor vehicle that he uses to run his business. Motor vehicle. Basically, these are the 3 non-current assets he uses. Okay, the cost of it, that is building, is 120,000. For furniture and fittings from the question is 10,000. Okay, and the motor vehicle also an amount of 30,000. Okay, now before we get our net book value, we take the accumulated depreciation from the cost. But then in this question, there is no accumulated or previous depreciation from last year. We only calculate depreciation for this year. Okay, so if there is an old depreciation in the trial balance, what we are going to do is that we add the old depreciation, which is accumulated depreciation, to this year's depreciation before we present it here. But this particular question, there is no accumulated depreciation or previous year's depreciation. So we only consider the depreciation for this year. Okay, but mind you, from the additional information, the last part, they didn't make any provision for building. So building has no depreciation. There was 5% of depreciation fixtures and fittings. So 5% gave us 500. Is that okay? And then with the motor vehicle, they said we should calculate 10%, and the 10% also gave us 3,000. 10% on this. After that, we take the accumulated depreciation from the cost. This place will still remain 120,000. This from this will give us 9,500. We take this from this, will give us 27,000. Okay. Then we close the account. Okay. This will give us 160,000. Because we are not going to use the cost and the accumulated depreciation, you close the account. But the net book value or the carrying amount, we will still use it. So we leave it unclosed. And we have 3,500 for this. We close it. And we also have, when you sum this up, you'll be getting 156,500. 156,500. We will not close this, okay? That is the carrying amount. We are going to use it. After that, we look at the current asset. But mind you, this current asset is not this. I'm not referring to this. Okay, so we bring it down small as current asset. With the current asset, you have the closing stock or closing inventory in the additional information, and the amount is 70,000. After that, you have debtors. Okay, mind you, I told you the debtors amount in the trial balance is 15,000. Okay, but then we were told that 1,000 cedis should be written off as bad. Okay, so after we've taken the 1,000 from it, that is 15,000. That is the balance as per trial balance. We take our bad debt written off, we get 14,000. Okay. After that, we less our provision for doubtful debt. We can still do that adjustment here. So let's do it. So let's say the debtors amount is 14,000. Then we have, that is the current provision. Current provision for doubtful debt, which is 700. Okay. And this will give us 13,300. Okay. After we've seen our debtors balance, what's happened is that we consider the bank balance too. So we have bank. I don't want to do the adjustment here, so I'll do the workings and send the final amount here. So bank. So aspect trial balance is 8,500. But the additional information is telling us that the proprietor has made drawings of 4,000 cedis for his son's school fees. Okay, that is personal use. So from the separate entity concept of a separate entity concept of accounting, says that the business is separate, it's a separate entity from its owner. So if the sole trader, which is Ericus Ventures, decided to make drawings of 4,000, that shouldn't be an expense to the business though. We're supposed to take it from the bank balance, okay, because we use it for personal service. So that is 4,000. That is drawings. Let me name it bank drawings. That will give us 4,500. So this will be the balance CD. That is the bank balance. So we bring the 4,500 straight away over here. The adjustment has been done here. You can also choose to do this adjustment in the question 2. In the preparation of the statement of financial position, you will not be marked down. After that, let's consider there is an insurance prepaid. I told you earlier on that all prepaids are added to current expense, current assets rather. So in the question or in the additional information, there was an insurance prepaid of 200 cedis. So insurance prepaid 200 cedis. Sorry, 200. After that, there is a commission received due. That is an income owing. So commission received due. The commission received due is an amount of 2,000, and this will give us 90,000. Guess I'm right. 90,000. Now this is the total current asset. From the net current asset model, you'll be less than our current liability. So we less current liabilities. Current liability, we have trade creditors, okay? We have trade creditors of 40,000 from the trial balance. The trade creditors balance is 40,000. We record it here. 40,000. After that, there is also electricity outstanding, okay? So that is electricity owing. Told you an expenses owing should be added to current liability. Is that okay? So electricity outstanding is an amount of 500 cedis. 500. And this will sum up to 40,500. 40,500. This is the total current liabilities. From the model, you'll be taking our current liability from the current assets. Okay. So if we take the current liability from the current asset, we'll be arriving at 49,500. 49,500. And this 49,500 is the working capital. Working capital. When you take your current liability from the current asset to give you your working capital, and the working capital is the amount the Recruits Ventures or the sole trader used to run the day-to-day activities of the business. Okay, so this is the working capital. And then when you add your working capital to the total non-current assets, okay, we'll be arriving at our total net assets, okay, or our net assets, and the amount will be 206,000. When you add this to this, we give you 206,000, and this will be the total net asset, or the total net current asset, or total net assets. Okay, after we've known the total net assets, so let's see how the sole trader finances business. So we have our capital. That is the capital that is being found in the trial balance with an amount of 100,000. Capital is 100,000 from the trial balance, okay? And we also ascertain a net profit from the income statement. So we add our net profit. Add net profit. The net profit we ascertain from the income statement is an amount of 24,000. And the total is 124,000. After that, we need to take out our drawings. But then, the drawings are two in the question, so we need to make some minor calculation to determine our total drawings. So we have drawings. So we have balance as per the trial balance. Okay, and the drawings there is 10,000 cedis. Okay, but mind you, in the additional information, they were saying that there was the sole trader made drawings of an amount of 4,000 for payment of his son's school fees. Okay, so that is bank drawings. The bank drawings is an amount of 4,000 cedis. Okay, totaling 14,000. So this is now the balance CD. That is the drawings balance as at now. So we are going to less our drawings. So drawing is 14,000. So we less our drawings. So anytime an amount is being put in bracket, it means we are subtracting. Okay. So when we take our drawings, you get an amount of 110,000 cedis. Okay. So after this, then we add our non-current liabilities. So we have non-current liabilities. And the non-current liability or the long-term liability in the question is only one, which is bank loan. Is that okay? It is being found in the trial balance. So we record our bank loan. The bank loan is an amount of 96,000. So we add the 96,000, which is our bank loan. Okay, and this will give us an amount of 206,000. Okay, so this 206,000 cedis is the capital employed. Okay, so after preparing your statement of financial position, your capital employed, which is an amount of 206,000, should be equal to that of the total net assets. Okay, so you can see that the statement of financial position has actually balanced. Okay, so this is how we go by preparing a final account of a sole trader. So I think you end our lesson here. If you haven't subscribed to my channel, kindly click on the subscribe button. Okay, and also like, comment, and share this video for the benefit of others. Until we meet, bye for now.